What are penny stocks, and why are they so appealing to novice investors and traders in the stock market? In this video, I'll explain what penny stocks are for novice investors, the reality about these firms, and what, in my opinion, is the better approach to make money off of these penny stocks. In order to receive additional free day trading videos on this channel, please subscribe, activate your notification bell, and leave a like if that topic interests you. Let's begin right now. We all understand that purchasing stock shares entitles you to a modest ownership in a firm like Apple, which has a market valuation of $900 billion. Investors use market cap, which is the total dollar value of a business's outstanding shares, to estimate the size of a company. Companies with a substantially smaller market cap are known as penny stocks. Generally speaking, companies having a market cap of less than $300 million are considered penny stock. Although definitions vary, the Securities Exchange Commission defines penny stocks as businesses with a minimum stock price of $5. If kept over the $1 threshold, several of these stocks are still traded on NASDAQ or the New York Stock Exchange. What makes penny stocks risky investments, then? The public's lack of access to information is the primary and main cause. Since companies listed on the pink sheet are not subject to SEC regulation and are not required to provide financial information for their investors, this truly only applies to OTC penny stocks priced under $1. Therefore, investors are unable to learn about these companies' cash flow, operating costs, and ability to generate revenue without certain documents, such as the 10K. Small-cap penny stock businesses that trade above $1 and are listed on the NASDAQ are required by the SEC to file their financial statements, sign up for offers, and alert investors to significant company updates. Numerous of these penny stock firms release news and pay promoters to boost the value of their shares with dramatic headlines. These penny stock PR frequently have terms in the headline, such as agreements, contracts, advancements, and strategic positioning, etc. As I've discussed in many of my previous day trading videos, these are what I refer to as sensational keywords, since these shady penny stock businesses profit on the fact that the majority of market participants are lethargic and only read the headlines. Like in my previous videos, if you truly read and analyze the entire article, you'll see that most of the time it's just filler with no meaningful insight into the company's potential earnings. Of course, the goal of this PR pump is to raise stock values dramatically. Pump and dump schemes have been demonstrated with OTC stocks. These penny stock firms hire online promoters to send emails and write deceptive articles on their behalf. The truth is that these sensational press releases are what are now deemed legitimate pump and dumps, and we are now trading in a murky area, despite the fact that many people will say that the penny stocks on the NASDAQ exchange are better regulated and less hazardous than the OTC penny stocks. In the perspective of the SEC, it is currently acceptable to inform investors of interesting developments regarding the company. Extreme NASDAQ penny stock manipulation incidents like LFIN and Hunt exist. Both of these businesses published false information to raise the value of their shares from under $10 to about $100. These are essentially a pump and dump with a 1,000% ROI. Later, the SEC looked into both of these companies and eventually delisted them from the NASDAQ to the OTC. That cost millions of dollars that the investors contributed. These PR pump and dumps from small-cap penny stock companies are essentially fairly routine actions in the stock market, unless it's truly obvious insider trading or manipulation. So, through this instructional film, I only want to increase awareness among novice traders and investors. Investments in penny stocks are always risky. Always exercising skepticism toward penny stock advertisements, press releases, and chat room recommendations is safer. Never forget to research the company on your own. Even though I believe some penny stocks can offer excellent profit chances for day trading and swing trading, I wouldn't recommend investing in tiny stocks unless you truly have insider information about the firm. That is not a top priority. Instead, they simply carry on raising money by selling more shares of their stock to investors in order to fund operations and possibly pay board members until the firm eventually declares bankruptcy. While it is true that some penny stocks' price variations from 20 cents today to 40 cents tomorrow might possibly give investors a 100% return on their investment, most individuals fail to recognize that there is also a downside. The investors would lose 75% of their investment in just 2 days if the price of the penny stock dropped to 50 cents tomorrow. Additionally, we typically observe these penny stocks following a significant sell-off. Due to offers and dilutions, their prices just keep going down. And it's not unusual for these penny stocks to be delisted from the NASDAQ and transferred to the OTC, in which case the investors in penny stocks run the risk of losing everything. And so, occasionally, we'll see some OTC-listed penny stock businesses that are listed on the NASDAQ. These are businesses that eventually meet the requirements and exhibit significant growth. Aurora Cannabis, ACB, a marijuana stock, is the ideal illustration of that. Prior to October 2018, their stock shares were listed as a CBFF on the OTC Pink Sheet. The likelihood of most penny stocks expanding their operations to the level of Aurora Cannabis, however, is incredibly unlikely. Therefore, I believe that investing in well-established firms like Apple, Facebook, and Disney would be a wiser long-term choice than putting your hard-earned money in penny stock. The long-term percentage increase on established corporations is undeniable, even though you might not be able to own as many shares if you were to purchase penny stocks priced under $1. Additionally, these investments are significantly safer. Don't get me wrong, swing trading and day trading in penny stocks provide great potential for profit. This means that rather than buying and selling these stocks over the course of a few months or years, you will only do so during a single trading day or within a short period of time. And on my YouTube channel, I emphasize these techniques. Any type of investment or trading in securities carries some risk, so do your own research and create your own risk-reward profile before investing your money in any penny stocks. Always exercise caution while reading press releases and never heed alerts from others. This video is not intended to be financial advice to purchase or sell any stocks, but rather to educate you on the downside and potential upside of penny stocks. If you correctly learn how to swing trade or day trade, check out my videos below if you're interested in learning more about day trading and swing trading tactics. If you like this video and want to receive free updates in the future, please subscribe and leave a like. Please leave a comment below if you have any other questions for me. The Humble Trader is this. I appreciate you all watching, and I'll see you all again soon.